In today's video, we'll have a look at, is Bitcoin ready for a relief rally? And we'll have a look at the levels that if you are looking to go long, where you should wait for. So stay tuned until the end of the show. Smash the like button and let's get straight into the show content. If you have a look over here at the bubbles, well, a couple of the coins are starting to bounce. And we want to have a look at this, right? Is this a bounce that you can trust? Is this a bounce that you should look to go long off? Is this just going to be a relief rally into a lower high? Or is the actual low in and we're going to have continuation? As always, you do have your own place that you can vote over here and share or voice your own thoughts. So let me know in the comment section over there, vote on the poll, and let's get straight into it. The first thing I want to start off with is the stock market and the traditional markets, right? You can see the DXY really starting to work at printing a major low over there, multi-decade trend line, price bouncing towards the upside. I think that this generally poses a little bit of a difficult time for risk assets. Now, I want to be clear, it doesn't mean that it's impossible for risk on assets, things like the NASDAQ, S&P 500, NVIDIA, Tesla, crypto, etc., to rally in that environment, but it just makes it incredibly difficult. So I think the levels that you're going to want to pay attention to is coming up very, very, very soon as you approach this. If you could start to see any kind of a rejection over there, that might provide some additional relief. And we have, for the first time in a long time, started to see a bit of a transition specifically on the S&P 500, and that is in the form of, we'll get to it now, there you go, a bearish cross, right? It has been officially confirmed on the weekly scale for the S&P 500. Historically, this has led to some at least interim drawdown, which would provide dip buying opportunities, right? So with the DXY now reclaiming back above its 200-day EMA, if it does maintain and hold above that, expect this is going to continue towards the upside. The death cross is effectively going to play out and pull the stock market down. And typically, crypto has a troubling time to rally in that environment. But I want to be clear, it's not impossible. There should be at least some short-term relief that comes from the rest of the market. Now, to give you a little bit of an overview of what happens when the stock market declines and how often this happens, consider the following tweet, right? I think this is really, really interesting over here. So a 1% drop is very typical for the stock market. That's 50 to 60 times a year. Normal price movements, 3% drop only happens 7 to 8 times a year. 5% drops happen 3 to 4 times a year. 10% drops only every 1.1 years, so every like 13 months or so. 15% drops you only typically see every 2 years, which means if you start to get into this region over here, 15% and beyond, this presents a massive opportunity, at least in the stock market, right? And then 20% drops every 3.5 years, and 25% drops you only tend to see once every 5 to 7 years. So having a look at the stock market, well, you can consider the short-term weakness to remain present within the market as long as price is below the yellow box over here, because this is your big 𝗕𝗏 region. This is where you rallied up into. It's 6,796. That's the area of weakness. We're not short on the stock market, but we are short on a couple of things. One of the assets that we're short on is, of course, MicroStrategy, which is still coming towards the downside, down almost 46% since our original entry over there. Now, I am actually going to look to cover some of the short over here. By cover, I mean take profits on it. So if you did take this trade with me, consider doing the same thing, because I believe that there will be some sort of relief in both MicroStrategy and Bitcoin, and that relief will most likely lead into a lower high where you can look for the next short trade, where you can take your profits that you bank from the bottom over here and you can reallocate them back in on the lower high, the macro lower high. And then we're going to be looking for lower prices over there on MicroStrategy. So that's still the plan. Updating you very quickly on gold and silver. I still remain short over here. There's a very high likelihood that this will stop out, just by the way, but that's the risk that you take. And at the end of the day, we timed this to perfection and we've completely eliminated the risk. So we're trying to play for the biggest swing trade towards the short side on both gold and silver. And yeah, for now it's okay, but we'll see what happens. Remember, we don't have crystal balls. I can't guarantee that this is going to break down, but if it does continue to respect this trend line towards the downside and the equal lows, the next time that you come into here becomes highly probable that it will break. And you can see over here, this will start to look, for example, if it respects that, a descending triangle. Remember, descending triangles break down more often than not, right? These are one of the higher hit rate chart patterns that are out there. And then we have the same thing happening on silver. We remain short over there, but there's no way we can lose on this trade. We do have our stops at break even, so still maintaining that trade over there. And then we can also look at quickly on Dow Jones. So similar to the S&P 500, as long as the Dow Jones remains below the yellow box over here, which I guess I'm just going to highlight over there, 46,888. That's going to be major resistance. And then the NASDAQ chart over here also putting in lower lows and lower highs. And the level to reclaim is also going to be the yellow box. That is your general weak area, 614, right? So continuing to update you each and every single day. Make sure you smash the like button, guys. Make sure that you're following me as well on X if you're not already. There's on the Whale Trade site, you can get all the socials over there because I will update you there if I'm not able to do a live show for whatever reason. But as you guys have seen, I'm coming to you live 6 days a week. Saturday, we outlined the possibility of a bounce as well. So if you watch that show, you should know exactly what we're looking for and how things are actually playing out now in real time. We've seen one important sign to suggest that, maybe there's a little bit of capitulation finally coming into the market, which is what you'd want to see to signal a reversal, right? So we'll get to that in just a moment's time. But I want to be clear, the high time frames remain unchanged, and these are going to be heavily affected by things, for example, like the DXY rallying towards the upside. And those high time frames come into play with charts like this, right? The 2-week chart has now officially closed below the 50 EMA. That's typically not a good thing. In many people's books, that signifies the end of the bull market. And more so if that 50 EMA begins to roll over, that's going to be more aggressive. But what's more important about this, and specifically what I wanted to highlight, is what happens around the midterms. As you can see over here, every time you lead into midterms, it is a bear market, highlighted by the red vertical lines going down the screen over there. So bear market, price goes below the 50 EMA. You lead into the midterms. That was back into the first one, 2014-15 bear market. And then you find your low soon after. 2018-19, below the 50 EMA, you lead into a bear market. You find your lows near the end of that midterm period. And then you begin your bull market. And then 2023 and 22 and 23, same story, right? Below the 50 EMA, drives price down into a bear market. And then now we're seeing the same thing for the first time in a while. So I know there's still people calling for 200K, 300K Bitcoin. And is it possible? Of course, anything is possible. But first, you would need to shift the high time frame trends back towards the upside before getting excited about those kind of numbers. In my humble opinion, you should just wipe those numbers out of your head until you can reclaim some key levels, right? Which we'll talk about in a moment what those key levels are. So, as this comment says, bears are in control, and that's exactly it. Bears are in control. Bears do remain in control as long as price is below that 50 EMA. And we also have the USDT dominance, 1, 2, 3, 4. We said on the Saturday show that this is going to be a vitally critical, line in the sand that bulls and bears are both going to be fighting for in the USDT dominance, coming into that white line, which is exactly 6.384%, to keep the hope alive, right? So the bulls managed to only just squeeze price below that line over there and close it below, which does mean that the hope is alive, which means that if you do effectively start to see a little bit of a reversal over here in the form of that dead cat bounce, this would have to come down quite significantly to get high time frame levels reclaimed. But this may provide a little bit of relief, right? If you pull back over here, it might provide a little bit of relief. But if you put in a high low, your next high low is extremely likely to rally through. And then this becomes the next target for USDT dominance. That is around that 8% level. So keep that in mind. Danger zone, you're in a danger zone. For if you're a bull, this is still a danger zone because the momentum is still very much in the USDT dominance bulls favor, which means higher probability that they just consolidate price over here, or any pullback leads into a high low and they're going to smash it through basically into the new year, which just lines up with this chart, right? What happens typically in those midterms. So I want to get into the hopium case as well. We don't want to leave you hanging over here. There is always a little bit of a hopium case, which could lead to some short-term relief. and it's covered over here on the Whale Trade site. And it's got a lot to do with, of course, the outflows, right? So we said that if we start to see aggressive outflows, similar to what you saw back over here when Bitcoin bottomed around $80,000 previously, and that came all the way back on the 7th of April 2025, we saw consecutive weeks, multiple weeks in a row of outflows, just like we've seen right now. And if we zoom in on the daily, you can actually see that that was one of the biggest daily outflows. Look historically compared to when you did bottom. Now we're zooming in that weekly approach onto a daily approach, and you can see over here the biggest outflows came when Bitcoin was trading at $91,000, excuse me, and then you had the outflows slowed down ever so slightly. Bitcoin came back to retest near those lows and form a new bottom just below $80,000, and then the inflows came back in, consequently leading to some relief in the market. Now you're seeing the same thing over here. Look at the outflows over here are similar to what we saw all the way back there in February, and then your low came in a couple of months later in April. So that's one of the signs that we had been looking for. The other thing that we had been looking for is for the daily exchange volume to maintain its upward posturing, which it is. But the most important thing is going to be the funding rate, which is on this chart over here. So for the first time in a really, really long time, we have now started to see that negative funding come in, and I'll circle it over there just so you can see it properly. We've seen negative funding on a weekly scale. That was one of the things that we were looking for. And again, I just want to be clear, this is not an all-time high call, absolutely not, but it simply signifies the potential for just a little bit of relief, just like we've seen every other previous time. Even in a bear market, if you consider these time periods over here, and I'll just zoom in to show you, even if you consider these time periods over here, for example, any time that, and let's grab our brush, any time that you printed in that bear market period negative funding, it did elicit some sizable bounces. So that's your little bit of hopium, right? Your little bit of hopium is the ETF outflows have got so extreme. We've seen the funding go negative, and that may be a telltale sign that maybe, just maybe, the bulls will step in for the short-term bounce. But you need to be really, really careful about that. So structural capitulation can be seen on various different timeframes. One thing that you're looking at is the short-term hodler's MVRVZ score, which just printed below 0.85, right? That means that for the last 155 days, basically anyone that bought in the last 155 days is underwater by about 15%. So what you can look at is historically, this is where a lot of those major lows have occurred. So these major lows led to all-time highs afterwards. I don't believe the same thing's going to happen, but at least a bounce, right? At least a bounce. So coming into 82K, just like 49, 74, 82, deep, deep, deep value. But there has been a structural shift that has occurred over here, bringing price in much deeper in terms of that correction. So you want to be absolutely cautious of that. Any bounce is likely to fail, but it's still playable, which we covered on Saturday. We said that you're looking at about a 20 to 30% move, which is pretty sizable, right? So total cryptocurrency market cap attempting to bounce off that 2.73 trillion level. That's taken, of course, from the low to the high. That's a 78.6% retracement, which in extreme scenarios, you do tag those zones and you can lead into a bounce. Now what you need to pay attention to, and I'm actually just going to delete that to clean it up and show you where your rejective zones are going to be coming into play. I would be pretty heavily focused on, first and foremost, let's just quickly throw that all on, the 50% level and the golden pocket. So any bounce on the total cryptocurrency market cap will be very likely to fail within this zone over here, between 3.5 and 3.7 trillion. That would be your lower high that occurs over there. But keep in mind, that's playable, right? A move from here to here, 25%. Certain altcoins can do 100% move in that environment. So long relative strength, but keep your, keep your book super clean, super tight when it comes to your trades. So I wouldn't recommend that spray and pray approach where you're going into a whole bunch of different things, but you need to be very, very, very cognizant of what you're trading and keep it concentrated, isolated to just a couple of positions. This has been the message for all of 2025. And anyone that listened to that, I'm sure it did serve you very, very, very well. All right, moving on over here. We also looked at Saturday. We said, look at these key levels over here. We have two pivot levels coming into play. First, from low to high low into that wick over there. Second, you had the previous highs into the next high low. And consequently, we had this inflection point over here. That price was coming into around that. Specifically, it's anywhere between about 82 and about 83,500. That could lead to a bounce. Now, this is still in play, right? We want to be clear. You're not out of the woods yet. This is still relatively early. You're going to have to use the lower time frames if you are looking for a trigger plan and you believe that this is going to hold price up at least for a bounce. Now, again, that bounce is probably going to lead into lower highs within this 100K territory. You can see 21 EMAs coming down, 50 EMAs rolling over, and anything that runs into that, it tends to test like a magnet, right? So as these two cross, that's going to be magnetic. It's going to pull price into that. Probably $100,000 is your rejective zone for your lower high, and then you're going to continue towards the downside. So just be aware of that. Very, very, very important. The good news is you haven't broken down your macro 50% level yet. That's coming in at 70,904. That's kind of the final nail in the coffin to end things. As soon as you close below that, it's absolutely all over. It is pretty much already, but closing below that, there's no doubt, right? There will be no debate about it anymore. Once you're below 70,904, it's over. So looking at the daily, you can see over here, we do have the momentum oscillators signaling a little bit of an opportunity for relief. You obviously want to line this up to get a low time frame trade entry. And I just want to show you the confluence. We did see the selling climax over there towards the downside with massive red volume bars over there, and that does signify potential for relief. Not only that, but you came into the orange line, which taken over the last 1 year's worth of price action is your value area low. Price typically reverts into that value area low, and then it attempts a little bit of relief. So again, just showing you that confluence with the relief around that $100,000 territory. You're going to be met with some massive selling pressure and volume. That has actually been the point of control on the green line over the last 1 year's worth of price action. And therefore, you should expect that price will revert back to fair value, which is around that 100K region, but probably a lower high. You can see over there, 108,300 was your previous lower high. We did warn throughout all of these lower highs. Be careful. Be careful. And then obviously price melted down over there and came towards the downside. So anything that rallies up into that, highly likely to reject. And therefore the best trade opportunity over there would be a short trade. Why? Because it's in alignment with the overall trends, which are towards the downside. So price is attempting to recover the pivot level, that being your RSI on the daily, which will shift it back towards the upside. You've dropped from high to low 36.24%. And of course, nothing goes down in a straight line forever. Unless it's something like Luna or Mantra. Therefore, you should expect some sort of a bounce, right? And if we go through onto this chart over here, this is how you're going to line up the opportunity to trade that bounce with a better risk to reward entry. There is quite a large CME gap over here. I know it doesn't look big on the chart, but it's about a $3,000 gap. And that's formed between, where price closed on Friday, where price opened on Monday for the CME chart. And it's because you had spot buys over the course of the weekend. You guys have heard the saying, never trust a weekend pump. So be careful of that. But nevertheless, that's coming in at 85,740, which is just below that Monday low right now. So in the low time frame, we'll be looking for opportunities maybe for a little bit of a gap fill over there. And then you can probably place your stop loss below if you are looking for that long trade and you want to long that into the next resistance zones. It should provide relatively favorable, right? We'll line some of these levels up quickly and just see what that looks like. Let's say, you rally up towards about that $98,000, I would say is like a more higher probability. Let's go conservatively. Let's say like $97,000, right? So if you were able to get this trade entry to $97,000, let's just see what that risk to reward would look like, right? Does it make sense to actually take this trade off of that CME gap? And it would look something like this. If you're floating your stop all the way at the lows over there and you're going up to $97,800 is what we said, well, that's still favorable. That's giving you a 2.35 to 1 risk to reward ratio. If you're using a very low time frame trigger plan, you may be able to get that down quite a lot, giving you a 5.23 to 1 risk to reward ratio. But be very careful because the trends are down, right? So this is a counter trend move. If you do take this type of a trade, it is a counter trend move. The higher probability trade is always going to be just to wait for price to put in the relief rally, reject off of that $98,000 region. This may not happen even this week. It may take a few weeks for that to happen, just by the way, and then take the short trade. That becomes high probability. But again, just looking for confluence out there in the market. What else do we have? We can go over here. Let's just quickly move that up. We do have negative deltas, right? Negative deltas over here on high block capital. It's not extremely negative, not as negative as what we saw when price came down and started to print that negative funding over there, but it's quite far down and there is some liquidity building overhead. So we'll monitor. What we have seen, just by the way, when it comes to the CME gaps, most of the time it was around Tuesday, Wednesday that price came back down to fill that CME gap. So that's probably where the trade opportunity is going to line up. My highest recommendation is probably just to wait. If you're a low time frame trader, wait for the Monday high and low to print. So in other words, wait for tomorrow. Tuesday is going to be your best opportunity. You'll have a beautiful Monday range to work with. And then you can start to look for that trade opportunity. So there it is. Also on the spot price, you had this long-term downtrend. We said this is a massive cluster of liquidity that would form anytime you see a downtrend like that. And you are currently breaking above that. So line that up as well with your spot price. Any drop below Monday low, probably only coming on Tuesday or Wednesday, that becomes the opportunity over there to trade that possibly a little bit higher. But this is a downtrend, right? Don't get it wrong. This is definitely all still a downtrend. There's a lot of work to be done. Just also looking at that, there you go. If you go into the daily time frame, your 50 EMA on the daily is currently trailing towards the downside. So you can imagine in a couple of days' time or a couple of weeks' time, we just draw this out. You can see over there, right? Let's say you come into early December, you print that low, rally up. You're going to test that in, that would be the 1st of December. You would hit that level, and that's going to probably be a resistance zone. So those are the things I wanted to update you on to be aware of. Remember, guys, the traders in Whale Room are still doing active trades, right? So if you want to get involved, we are at 81.5% capacity, right? So we're almost completely full in Whale Room. It is Black Friday, 48% off for anyone that wants to get involved. Just make sure you use the code. You have to apply the Black Friday promo code, right? So take that. There you go. Copy it. Go through over here. Say sign up. Go through to the bottom, and you'll basically apply that code. Let's just let that load up. Scroll through to the bottom over there. Apply the promo code, and it will give you your discount on the special. So there we go. Okay, wait. Let's just see. I probably need to reopen that one. Let's try that again. I just want to make sure it works for you guys. Let me just try that again. We have to make absolute, maybe it's full already. I don't know. Maybe that's why it didn't work. Let's just try that again. Okay, you can copy the code from here to make double sure and apply. Let's just see that works for you guys. Okay, there we go. Yes, it's working. It is working. It's working. Alrighty, so let's move on. Another very, very, very important chart to focus on is going to be the USDT dominance. One of the levels we are looking at getting cleared to, shift the probabilities was at least this level. So you have broken that level, but if you go on the 4-hour time frame, you're still coming into that 50 EMA. You still need to break below that. But what you want to look out for now is any little bounce on the USDT dominance. So any bounce over here that leads into a lower high, use that as your invalidation. That was the wick that occurred on Friday. That should drop consequently Bitcoin below the Monday low. So down into those low targets that we've just given around that, $85,000 zone. USDT dominance bounces, sets in the lower high over there. Look for the bullish divergence on Bitcoin. Look for the bearish divergence on USDT dominance. And then that becomes your trade, right? Therefore, you become short on USDT dominance over here. Stop loss goes above. You become long on Bitcoin for a relief bounce. That could be sizable. 20 to 25% is on the table, right? We spoke about that on Saturday. Okay, cool. We can get into altcoins. Another thing I wanted to mention when it comes to Ethereum is you are finding support over here. We also covered this on Saturday. You're finding support at that all-important golden pocket over there. That is your 0.618 and 65 fib level, 2,600 to 2,750. You are holding that. Reclaiming this level will be significant. The yellow box. Why is this significant? This is your mid-range. So when you consider the overall trading range low, mid-range, and range high, you would be bouncing off of the golden pocket and recovering. Now, if you watched any of the videos last week as well as on Saturday, what I specifically said is I'd wait for confirmations. I wouldn't go long over here. And I said, you could long it over here and put your stop just below, but it comes with a lot of risk because you want to see some more strength develop. Strength would come in the form of reclaiming the yellow box, the 50% level. So you want to see some structural shift over there, some demand come in and form. And it's going to take a little bit of time for that to happen. And then more importantly, if you can get above that 50%, that purple 50% level is coming in from the major low to the major high over there. And only until then do you start to show relative strength in the market, right? Okay, so that's what we're looking at over there. We'll have a look at the other altcoins over here for you guys as well. Let's see Zcash, which is, let's see, is it weak or strong? What is going on in Zcash today? So zooming in, let's go on the 4-hour time frame. Okay, zooming in over here, you can see the potential trend is shifting. So just be aware, there is a possibility that this is range bound, but right now what you're looking for, if you somebody that's long on Zcash, and I'll price label it over here on the 4-hour, you're definitely going to want to get back above this zone. Wait, let's get that again. You're definitely going to want to get back above this zone because you can see high, lower high, right? Low, lower low. The trend is beginning to shift over here. Let's just get some confluence with this overall trading range and see where that 50% level comes into play. And isn't that interesting, right? Very, very, very similar place. The purple line just below, smidge below. So even if you're viewing this as a range trader would say, you know what? I need to see price reclaim the purple line in order to get long off the mid-range to the range high. That's what you need to see. So it's the same thing, whether you're a trend trader, there you go, whether you're a trend trader or range trader, 613 brings you back into a point of safety. If you are looking to go long on Zcash, you basically want to see this, a big move up, consolidation over here above, call it 600, nice round number. You want to hold above 600 over there, and that can shift things back towards the upside. Otherwise, there is a chance that this fails and it comes back down. Speaking about failed rallies, another thing to pay attention to on the daily is going to be when we do get this relief rally. Where's that chart? Let's go back onto, here we go. When you do get this relief rally, and I'm going to turn this off to not confuse you, zoom in, there we go. When you get this relief rally, just pay attention to what's going on the volume. If you want to know if the relief rally is real or not, so imagine as price is moving up towards here, if the volume is just declining on the daily chart, this is not a specialized indicator. It's just for any of you can get that on TradingView, right? Just pull out your volume profile over there, your normal volume chart. And if that's going towards the downside and not taking out these levels, then that's a warning sign that the rally is definitely going to fail. It's going to be a lower high over there, and you probably want to short that. Okay. So it is going to take time for bulls to reverse things if they're going to. For now, bears remain 100% fully in control. We can take a couple of altcoin requests. I do want to remind you as well, guys, there's a lot of Black Friday specials going on. You also have 50% off of Ledger. This is the biggest sale that they do of all year. We are partnered with them. Of course, they're one of the best hardware wallets in the entire world, if not the best. So use the link in the description below if you want to get that discount. And same thing over here as well on Bitfunded, right? Remember, you're getting 100% profit split. That's the biggest thing for Bitfunded, which means you can take your time, wait for the market to settle down. And if you have a great trading strategy in a certain market condition, you can load up on all the funded accounts, which costs you a fraction of the price. Remember, you're effectively paying, for example, for $100,000, you're paying $2,397, and you get 6 challenges for that price, which is effectively $600,000 potential, right? That you can work with. Huge, massive, massive, massive. And if you trade those accounts up to 100% profit, for example, well, then you'll keep $100,000 profit, as opposed to splitting it with the funded platform, which is Bitfunded. That's usually how it works. You usually split. You get 80% and they keep 20%, but this time for Black Friday, you're getting 100%. All right, let's have a look at some of the other majors, some of the other altcoins. I see you guys asked for 𝗬𝗎, so let's just see what's going on 𝗬𝗎. It's really bad, right? It's a very strong downtrend, and you have to expect that any rally up over here is probably going to fail, and this can easily go much lower. So a lot of work to do. Big moves, right? The relief rallies, again, just giving you some perspective over here. Even from current price, a relief rally on 𝗬𝗎 can put in a 15% bounce, and it'll probably still be met with a lower high over there. Okay. We can have a look at some of the others. How is Aster doing? It was one of the stronger ones. Okay, breaking below that trend line. So I think that this is probably, its rally is probably done. Asta is probably going to be coming back down towards those lows, 86. Unfortunately, right? That's the honest truth. Breaking that trend line over there just shows weakness over here. It's probably going to come back down. It's consolidating. It's chopping about and consolidating. So instead of trending, there is a high likelihood that you're going to just see something like this, right? You're just going to see something like this for a while. Okay. Altcoin, I know there's a question around that. I can't imagine this looks very good, but we'll bring it up anyways. So Altcoin, let's move on to the daily chart. It has hit absolute range lows, right? Very, very, very critical level. So can you put in a bounce? Of course. Where's this thing going to bounce to? You know, in an extreme scenario, most of these coins will bounce towards those breakdown levels. So if you are looking to long this, 63, 64 cents. Okay. 63 to 64 cents. What else do we have, guys? Optimism. I know that I can't imagine this is good, guys. I have to be honest with you. I saw your optimism request. Let's have a look at that. I feel like it's going to be rinsed. And it is. It's absolutely dead. It's at zero, basically. On its way to zero. 30 cents, but like all-time lows. Literally all-time lows. Closing candles at all-time lows. Any bounce that occurs over here will probably fail, you know, before even getting above 35. It's going to fail and then make new lows. Okay. Alrighty. So guys, there's very, very few coins that look good in the crypto space. You should be sticking with the winners. Bitcoin, volatility in Zcash. I'm not calling it necessarily a long-term winner, but there's volatility in Zcash, which means it has the liquidity for you to make money in. Asta was a maybe. Let's go through the rest over here. This is a bounce zone. So yes, relief rallies for XRP all the way up to $2.42 as possibility. We have Solana. It's been obliterated. It could put in a bit of a bounce over here, you know, all the way back to about 150. But ultimately, I still think $100 is coming for Solana at some point. We have Sonic closing all the way at new lows. Not really bullish. Say probably could easily put in a relief rally up to about 16, 17 cents. Cardano also could put in a relief rally. I mean, this one can probably make it to about 48 cents. AVAX can put in a relief rally back to about 16. TON, terrible. One of the worst coins out there, just consolidating at new lows, almost no bounce over there. Casper hit some of these key levels. You know, this can rally up to about 0.048. Okay, Tron, yeah, this can relief up to about 29. New lows, Plasma, new lows, terrible. Pump.fun, hitting key support. Okay, also watch out for a relief rally over here. Tagging key support, potential for a bounce. Let me know in the comments, you know, if there's anything else that you guys have seen that is maybe doing well, something that is trending, that has relative strength against the rest of the market. Most of these things are not good, right? Very, very, very critical support. So you might want to add it onto your watch list. Hyperliquid, if the broader market puts in a bounce and you're a short-term trader, this can jump up to about $37, but overall it's still weak. It looks like distribution, it's probably going to end up closing below here and distributing much lower at some point. That's the truth. Apex, we believe, is coming all the way down to about 38. So yeah, even BNB, which was one of the strongest, relief rally, but distributing, and it's probably going to make it all the way back down to 692 at some point. Okay, you guys say HBAR. I'll have a look at HBAR USDT. HBAR USDT. Look, anything that bounces into 17 over here, 17 cents, is a shorting opportunity in my opinion. So if you can see this jump to about 17.7 on Hedra, HBAR, yeah, it had a nice bounce over here, but it's also going to fail. Let's just see the confluence of that locally. So yeah, exactly. There you go. Golden pocket over there, pretty much exactly where I think it's going to fail. So if you see this rallying up into here, like this, Hedra, that is your shorting opportunity. Alrighty. Cool. Guys, look, there is opportunity out there if you do want to capitalize on some free money. I always try to find things for you. One of the ways that you can do that is if you use the link below to BitUnix. This offer is only until the 30th of November, so take advantage while you can. And I believe it's only limited to the first 250 people. So I'm not exactly sure that there is any still available. But if you deposit $2,000, they will give you $400. That's basically 20%, right? So if you want a 20% trade, you want to make 20% right now today, risk-free, well, you can do that on BitUnix, right? So sign up on the link below, make a $2,000 deposit. They'll give you $400, and then you can use that to open maybe the Monday range trade with. Let's relook the low time frames over here on Bitcoin as well before we do close off. Okay, so here we go. Look, I'm not super mega excited to long just yet, but maybe that sweep below the Monday low will begin to look good, because on the low time frame, this was also your support, your resistance. Price came down, resistance started to reject, attempting to flip that into support. So you can easily see that Monday range. If you come in for that CME gap, get back above. This is kind of a local horizontal area of interest. I'll just highlight it very quickly. Let's just do that. There we go. And we need the price chart to load over here. Let's go on the hourly over there. Okay, so there we go. This is a local area of interest. So sweeping below, flipping that yellow line into support could open up a short-term trade, up towards some of these high levels. Okay. What else? Yeah, Monday range is not done yet. You have to wait. Monday range is not done yet. There's still work to be done. There's still volatility in the market. There's going to be a lot of attention as well in the stock market, especially given, that, where's that chart over there? You do now have a bearish MACD cross, which typically does lead to further downside. So it's very difficult even though crypto typically draws down first before it ends up crashing before the stock market. It's kind of a leading indicator. You kind of want the stock market to have at least confirmed that it's bottoming before you go long on Bitcoin. So Black Friday specials all around, even on the crypto market. So if you are bullish on the higher time frame and you believe that some of these factors are going to lead to some bounces, well, you've got the specials, right? I'm not convinced. I'm more of the opinion that you will probably lead into a bear market during the midterms, just like any of the other years that have occurred, right? We made our timing cycle top. We did it. 1,070-ish days in, we started to become incredibly cautious on the market around day 1,000-ish, around there. I even had that whole countdown clock that I showed you guys. I still have it on the table over here. Cool. 2020 type corrections, not yet. I mean, that's extreme. That was a once in a lifetime opportunity. When you see that type of a correction, that's once off. You're shutting the whole world down. All trade halts. People panic. We've never seen that before. I don't know if we're going to see that kind of stuff. I think a more orderly bear market is most likely. Similar to here, just downtrending, lower lows, lower highs. No real capitulation other than time-based capitulation. All right, guys. So we're constantly looking for opportunities. Remember, take advantage of Black Friday while you can. The spots are limited. Once we're at full capacity, we are going to be closing it off, and you're either in or you're out, right? So that's it. I'll see you all on the next one. Have a good day, and cheers for now.